Today, we are diving into Intermap Technologies' latest earnings report, and let me tell you, it is a real head-scratcher. I mean, on one hand, the numbers look like an absolute disaster. But on the other, you have the CEO telling a completely different story. It's a classic financial puzzle, and we're going to solve it together. So, this is the big question, right? How on earth can a company claim it's stronger than ever when its revenue has basically fallen off a cliff? Well, that is the mystery we are here to unpack today. All right, let's just start with the hard numbers, the part that makes you wince. The most glaring takeaway from their report is this. Annual revenue plunged from $17.6 million in 2024 down to just $10.6 million in 2025. That is a 40% nosedive. Yeah, not exactly a number that screams confidence. But then, right in the middle of all this bad news, CEO Patrick Blott says this: the business itself is stronger than ever. So you have this massive revenue drop, and then this huge declaration of strength. What is going on here? Okay, to figure this out, we can't just look at that one scary headline number. We've got to play detective here. So we're going to break down their report and look for 3 key clues that are kind of hidden in plain sight, and they explain this whole contradiction. So, our first clue doesn't have to do with what they sold, but what they have in the bank. You know the old saying, when in doubt, you always follow the cash. Just look at the sheer scale of this change. I mean, it's wild. At the end of 2024, Intermap had just $400,000 in cash. A year later, a staggering $22.5 million. This wasn't some small bump. This was a complete financial transformation. So where did all that money come from? Well, it wasn't from sales. This was actually a deliberate, strategic move. They went out and raised capital specifically to strengthen the business for the massive long-term projects they see coming down the pike. And you can see this newfound strength goes way beyond just cash. Their shareholders' equity, which is basically the net worth of the company, it ballooned from $3.7 million to nearly $25 million. And their current ratio, which is a fancy way of measuring their ability to pay the bills, jumped from a kind of shaky 1 to a very healthy 5. To put it simply, they went from living paycheck to having a really robust savings account. Okay, let's move on to our second clue. This one's all about digging into that scary revenue number we saw at the beginning, because it turns out not all revenue is created equal. Understanding the type of revenue they're making is absolutely crucial. Now, if we break down their revenue for 2025, you see something fascinating. The business is now split almost perfectly down the middle. Almost half of their money is now coming from subscription and data sales. And believe me, this is a huge shift from how they used to operate, relying on these big one-off projects. So get this. While the total revenue was down, this incredibly important part of the business was actually up by a lot. The subscription business grew by a really healthy 29%. This is the part of the company that provides stable, predictable income, and it's thriving. Suddenly, that stronger than ever claim starts to make a whole lot more sense. And here's why that shift really matters. Project-based revenue, especially from government work, is what they call lumpy. You know, it comes in big chunks, but the timing is super unpredictable. Subscription revenue, though, that's the bedrock of a modern data company. It's recurring, it's predictable, and it's usually very profitable. So, the crucial point here is this. That big 40% drop in the headline revenue wasn't because they lost customers or anything. No, it was all due to timing delays in awarding these huge government contracts. The business itself didn't shrink. It's just that the paychecks got delayed. And that leads us perfectly into our third and final clue. If the past was all about timing delays, then the future is all about the pipeline of contracts that are expected to land. And honestly, this is where the story gets really, really interesting. Now, before we look at the pipeline, we need to quickly go over a piece of jargon you'll see in their report, down selected. As the CEO kind of joked on the call, it's a silly word, but it's important. In the world of government contracts, it just means you've been selected, you've won the competition, and you're moving forward. Okay. With that in mind, just look at this number. Intermap has been down selected for all 4 parts of a massive national mapping project in Indonesia. The potential value? Around $200 million. To put that into perspective, that is nearly 20 times their entire revenue for 2025. And it's not just one big bet on a single project. The report also points out that they're in the final stages of signing contracts for several fully funded U.S. government programs. Plus, a new flood mapping contract over in Malaysia is already locked in and will start showing up as revenue in 2026. So, with that whole pipeline in mind, the company has actually put out official guidance for 2026. They're forecasting $30 to $35 million in revenue. Now, if they hit that, they will have essentially tripled their revenue in a single year. And that would make the 2025 dip look like a tiny little blip on a much, much bigger chart. Okay, we've gathered our 3 clues: the cash, the revenue mix, and the future pipeline. Now it is time to put it all together and deliver the verdict on this whole financial puzzle. It all really comes down to this: the bear case versus the bull case. The bear case, the story told by the 2025 numbers, is all about that scary revenue decline and project delays. But the bull case, which is what the company is focused on, is a story about a massive pile of cash, a huge pipeline, super strong guidance, and impressive growth in their most valuable business segment. So our final verdict is that 2025 wasn't actually about a business in decline. Not at all. It was a story about timing. It looks like the company consciously strengthened its finances and took a short-term hit to its revenue in order to position itself for a series of huge transformative contracts. And that leaves us with one last, really crucial question. With a rock-solid balance sheet and a pipeline that is just stuffed with massive opportunities, the issue for Intermap isn't about survival anymore. It's no longer if they can win. The question now is simply when. Will 2026 be the year all these puzzle pieces finally click into place? That is the multi-million-dollar question.